Hi, this is Zach here with the Bulletin Board Heroes here at Vox Market, starting off with active energy, where it looks as though we've got a bit of a breakthrough here. In the near term, we've broken a line of resistance from back in the beginning of the year, beginning of January. That was broken yesterday around the 0.15 level. We also broke the 50-day moving average. And also, we've had an unfilled gap to the upside, a bear trap gap reversal. So we gapped up earlier this month and never filled that gap, not even below the top of the gap. And that type of signal is normally seen in pretty strong situations. Initial target here up to the top of the gap back in December. So that was around the 0.27 pence level. Maybe a best case scenario target up to 0.34 at the 200-day moving average. But at least while we're above the 0.15 area, looking for a decent upside there at active energy. Good to see Alba starting to move. It's had a rather rocky run in the recent past, but we had that trend line break back in January. Went sort of range bound since then, but it looks as though the shares are ready to break out of what looks like a triangle formation that's been in place since the beginning of the year. Exactly where we're going to break out is probably the 0.24 level, so an end of day close above that, and we could be heading towards the resistance line projection from back in June last year as high as 0.4. So quite a punchy call there, but let's see if that is delivered on. We've also got this uptrend line in the RSI window, which has been multi-tested, and that kind of setup does tend to produce reasonable momentum. Speaking of momentum, we've got plenty of that in the recent past at Chariot and a bit more now. Gapped up at the beginning of the year through the 50-day moving average, came back to fill that gap, which can happen and can be rather painful. But since then, it's been a pretty good run, and here we've got a gap up towards what will be our technical target over the near term, as high as 20p, maybe by the end of next month, while we hold above 14 pence. So everything to play for there for those who are still long at Chariot, but that gap, very impressive. Onto a stock which has not been that impressive in the recent past, and you'll see why in a second. Essensys, here we had a massive gap to the downside, but what's encouraging at the moment, probably not one of the few things which is encouraging, is the way that we've got a W-shaped reversal. So we had sort of double bottom there. Neckline resistance just about where we are at the moment, so around the 83 pence level. End of day or end of week close above 83 pence, and we could be looking for the shares to at least get back towards the £1 to £1.10 area, which was the trading range at the beginning of this month. This stage only really well below yesterday's support at 75 pence, delaying the upside scenario. One of the more encouraging situations at the moment is Falcon Oil and Gas. And here we've had a gap through the 50-day moving average. Looks like the shares are going to retest the top of that rising trend channel from September as high as 15 pence. Target valid while we hold above the floor of the gap at 10 pence. But I suppose the main thing there is just how strong that situation looks, especially after the latest fundraise. Innovaderma is the next contender, and here we've had a double gap or triple gap off support. Maybe a bit of consolidation required, but above the 50-day moving average at 33, we could see the shares up to the mid to or even upper 40s over the near term, although obviously this is not a very liquid situation and could be a little bit on the erratic side, as it has been in the recent past. Stock which is highlighting itself at the moment as a potential turnaround is Karelian Diamonds. Here we've had a bear trap from below the September support. That was at 2.3. Little island reversal there. An island reversal and a double bottom as well. Never filled the gap, so support above the top of the gap. Again, a very strong signal, and that does suggest that there could be reasonable upside here, perhaps at least up towards the line of resistance I've drawn from August last year at 4.5, which would be a nice return, maybe as soon as the end of next month. But just the failed gap top fills do tend to be very strong signals, and hopefully that's the case with Karelian over the near term. Moving along to one of the stars of this week, Keras, where I had a rather ambitious-looking resistance line heading up towards 0.135 earlier in the week. Now it looks like we might just be able to take that out, maybe today or tomorrow. Not quite sure whether I'm brave enough to make to look for a new target after 0.135, but you can see from the daily chart that the initial 2021 resistance was around 0.15, so maybe there'll be a test of that over the near term. Upside valid, I suppose, while we hold above the old resistance of October around 0.1 pence, if you can play the market that closely. On to Mode, where I interviewed the new CEO yesterday, and things seem to be in recovery mode here, maybe linked to that, I'm not sure. But the shares broke the 50-day moving average last week. That's currently around the 12 pence level. Above 12 pence, we're looking for 19 pence, which could be hit over the next couple of weeks, and would take the shares back to where they were at the middle part of January. Just want to see that 50-day moving average start to turn up, and that would maybe add fresh momentum to the Mode global share price. Moving on to Marchal, which has effectively bounced at the floor of this rising trend channel. Let's get straight in the line a bit, and the 200-day moving average. The good news is we bounced above the 200-day moving average on 2 occasions. That does suggest that we're clear now above 2.5 pence to head up to 5.5 or 6 pence over the next 4 to 6 weeks. Cautious of the shares, maybe wait for at least an end-of-day close above 3.2 pence mid-price before pressing the buy button. Fresh news today from Orphan, which has of late been piling on those new contracts, and 5 billion seems to be the favourite one there. But here it just looks as though we've once again got support around the 13 pence level. Just means that dip below that level earlier this month looks as though it was a bear trap. If that is the case, then we should hopefully head up towards the 20 pence zone over the next 4 to 6 weeks, or perhaps even sooner. Be cautious of the stock and wait for an end-of-day close above the 50-day moving average, the blue line there, at 15.7, but not expected now to remain below 13 pence at Orphan. On to Rambler, which has had a sort of a consolidation period since November. It looks as though the consolidation is ready to end now. We've had a little bear trap below the 27 pence level, so that's a plus for the bulls. Pushed above the 50-day moving average again now, and probably all we'll need now is over the near term is a break of that resistance line there around the 31 pence level on an end-of-day close basis. If we can get that, then we should see the shares back in the mid-40s, which is where they were back in November. So decent range bottom fishing opportunity. On to Sereness, which has required oil to go, I think, above $100 a barrel to get it really going. But here we've had sort of higher, at least a few higher lows since the beginning of the year. And the longer that we stay above the 50-day moving average around 1.7 pence and holding recent support at 1.6 pence, the more likely it is that we'd head at least towards the top of the recent range at 2.2 pence over the next month or so. Finishing off with Tirupati, which has had some decent warrant news from the company. Here we've got this uptrend line in the RSI window, which has been in place since November, and that gives us the expectation that we'll resolve to the upside in terms of the consolidation that we're seeing at the moment. Having a bit of difficulty with that line, but uptrend line there in the RSI window. The other point to note is that most of the support for the shares in the recent past has been at 65 pence or so, and so the only bear trap that we had there was basically earlier this month. With that out of the way, and assuming 65 pence will hold, we should head back up towards the low 80s, which is where the shares were back in the first part of February and late part of January. That's it for me today. More updates tomorrow.